Penny, thanks for joining us. In India's cross-border SaaS companies on the front line after the collapse of SVB, with most having accounts with the beleaguered bank. Ritu joins us now to take us through the impact on Indian companies and how they are placed as of today. Ritu.
Well, sleepless nights, a crash course in treasury management, the threat of an extinction event and lessons in risk diversification are perhaps some of the phrases that best describe the last few days for tech startups in India, which have been impacted by the collapse of the Silicon Valley Bank. Now, while the US government has assured depositors they will be made whole, but in the near term, this could lead to cash flow problems, which in turn could lead to trouble in meeting payrolls and other day-to-day expenses. And there's also the question of what happens to any uninsured deposits as well. The larger concern is that many VCs deposited millions in the bank, which could lead them to further slow down funding moves and delay term sheets. Now, as to who the impacted startups in India are, well, a majority of Y Combinator-backed startups, which typically deposit their first checks in SVB, will be the most impacted. And according to reports, about 60% of Y Combinator startups have Indian founders and operations in the US and India, with an exposure to the bank and deposits of about $250,000 or more each. Now, according to data from Traction, the bank had invested in about 21 Indian startups, which includes the likes of Shadi, Naptol, Paytm, which of course it later exited. Nazara Technologies has said that 2 of its step-down subsidiaries held cash balances of about $8 million in the bank, but it does not expect any impact on the day-to-day operations. Freshworks also issued a statement clarifying its exposure to the bank was minimal and that it didn't see any disruption.
The overnight statement by Senator Yellen saying that the government will ensure that all depositors are covered, not only the amounts covered by $250,000, but beyond that as well, gives us a lot more hope. They offer, especially for international companies like ourselves and our subsidiaries, much faster onboarding and on-ramping, for accounts.
Next steps are really very simple, which is we never, ever want to be in this situation as a company. And that's what we're working with our founders on. I think one high-level thought that I've been playing with is how can a startup, right from the seed stage, have access to a fractional CFO who essentially gives them the oversight that is required to help them think through all things that matter, including treasury and how they are parking the funds that they're raising.
We've understood that hopefully the extinction event that people were talking about or the run on other banks that people were worried about will not happen. Diversification, both from a VC fund perspective, from a startup treasury perspective, from any startup-focused bank perspective, that seems to be the key word. Because one thing that's actually scary in a sense is that this is the first bank run which was sparked and catalyzed digitally. So I think that there will be more events like these in the future.
Well,